what's happening in crypto right now is I think we're in a bottoming process and have probably bottomed. And I'm going to talk you through my reasonings for that, and more importantly, how macro fits into this, because many of you are crypto people and now you're learning that macro is a really important thing. And actually, this is one of the reasons we set up that whole real investing course, to teach people about macro and investing so you get a better understanding how to do it. But the macro right now is very important. So I'm thinking that economic growth falls off a cliff. I put out some tweet threads about this. I've talked about it on the daily briefing. I've been talking about it for some time and writing about it in Macro Pro. Markets are sort of pricing it in. Now, crypto's been picking up. Now, it's interesting because most people don't understand that macro and crypto are so related, because crypto is this network adoption model that I'll come onto in a bit. But really, the big cycles, I'm starting to think, are not driven by the halving cycle so much as the macro cycle. It might coincide with the halving cycle, and that means a supply issue plus a demand issue. Why a demand issue? Well, because global liquidity is what M2 is. So if there's more liquidity, there's more money that flows into crypto. As liquidity comes out of the system, there's less money. One of the other things that's been weighing on crypto has been inflation. It's a long duration asset, and long duration assets need to worry about the discount rate, and inflation is part of that, plus interest rates. Interest rates have risen, inflation has risen, risk assets get discounted more. So we've got to that. So I'm looking for the turn here. The other long-term indicator I use is the 5-year exponential moving average. And this has encapsulated the trend of Bitcoin pretty much since the beginning. And here we are, just touching that trend. We broke through it. I think we break back up through it. So again, what's the downside? 30%. What's the upside? 10x. So those kind of risk rewards are super rare in almost any asset class, but they are in crypto, and we're in that zone now, and I'm getting more and more comfortable with there. Now, a lot of people say, yeah, but it's got another leg lower to come. Well, if I look at the crypto fear and greed index, it got to 6. This is the lowest I've ever seen it get to. So basically, everybody's bearish. Everybody was expecting another sell-off down to 15,000, 10,000. Is it possible? Of course it's possible, but I don't think it's the highest probability. Could we have a new low? Yes. I still think that's probably maybe a 40% chance, 35% chance. I think the low is in, and anything from here is a retest of that low. But, I could be wrong. Anyway, it's still a zone. If you say 30% downside, 40% downside, 10x upside, that risk reward, I'll take it all day. So, why Ethereum now, apart from the charts, is the merge. The merge is probably the single most important thing that I can think of that I've seen in crypto since the invention of stablecoins and the launch of ETH itself. Now, that's quite a big statement, and there are risks that it doesn't work fully. I get that. I'm prepared to take the risk because I think it will. You may not be prepared to take the risk, and that's fine too. The merge is where Ethereum goes to proof of stake as opposed to proof of work. So now you're not having computers crunching the maths and being rewarded as miners for doing the work. What you're doing is you're pledging your Ethereum for a year to secure the network. And that's called staking. And staking participates by you getting a yield for doing that, which is staking your coins, i.e. you can't use them, and you get a return. So I'll come on to that in a sec. But what's really interesting here is this is a supply reduction of really monumental proportions that's about to happen. Now, I'm more of a demand side person than a supply side person, but when demand and supply are both in shock, okay, then we got something interesting. So what's the supply side? Well, miners. There are no miners anymore. So therefore, all of the activity of miners of selling the tokens that they've earned, they probably sell about 80% of the tokens that they get just to fund their own activities. That's about $1 billion or $2 billion a month that's out of the market. So that's a small supply shock. There's no ongoing pressure every day from miners who've been rewarded with Ethereum. So now we've got the internet bond. And I know people have used that terminology before, but they haven't really joined the dots as what that means. Ethereum being the largest yielding asset in the space, it has a in ETH terms, a risk-free yield because it's generated by a smart contract. So it pays out yield in the smart contract. Now, the risk you're taking is currency risk, ETH. And again, people need to understand what these terms mean because there's a lot of bullshit online. So what you've got is pretty much a guaranteed yield from ETH. Obviously, there are things that go wrong. US bonds are deemed risk-free, but they're not. Nothing is in the world. But you know what I mean. This is a benchmark yield for Web3 from the largest asset in Web3. ETH merge looks like it's happening September the 19th. There are, of course, risks around it. But I think this is one of the single most important things to ever happen in Web3, and it needs to be on your radar screen. I'm not expecting, it doesn't have to be fireworks going into it or the price explodes coming out of it. It may well do. But what I think is it's an accelerant to the space. If the macro's right, then ETH should do extremely well over the next year, 2 years, if the macro cycle remains benign and positive.